For more than 20 years, My 529 has helped families invest in their children's educational future. For more information about the benefits and risks of investing in My 529, visit my529.org or call 800-418-2551.
Welcome to Money Making Sense, the show that talks about all things money. Today we're going to talk about mortgages, and I have joining me Rod Rex. You're with LendRight Mortgage, correct?
That's right.
Yeah. Right. Well, first, welcome to the show.
Thank you for having me.
So I wanted to talk a little bit about the difference between wholesale and retail mortgages, because I'm not sure a lot of people know that that there are two different types of mortgages, and what does that mean for them? So you do wholesale mortgages, correct?
Correct.
So what does that mean? I walk in the door, I'm looking for a mortgage. What does being a wholesale mortgage person do?
So as a mortgage broker, rather than working for a bank or credit union where they offer just their products, I'm independent, so we have the ability to shop a network of premier wholesale lenders. And what that does is allows us to find the right product, the right fit for each client, whether it's a purchase, a refinance, cash out. These lenders offer lower combination of rate and fees. And that's simply because of their business model. They do mortgages, that's all they do. They don't do credit cards, debit cards, checking accounts, savings accounts.
So sort of if I went to U.S. Bank, let's say, I went there and because I have a credit card with U.S. Bank, and I go, oh, well, they've been really good on my credit card. I'll let them service a mortgage for me. They are only going to offer me, let's say they have 5 different types of mortgages. Those are the only 5 I will be exposed to if I went to them specifically. But you not only can go to U.S. Bank and see their rates, but you can go to a bunch of other banks and lenders to try to get money for me, correct?
Yeah, that's right. Yeah, we've got just the simple concept of being able to shop. So what we do is we have contracts with these lenders, and we have some volume discounts just because we send them enough business besides the already discounted rates and fees they offer us. Because of the volume we do with each of those lenders, we get additional volume discounts. So it just gives us the flexibility to work for the client rather than for the bank or the credit union, where we're not tied to selling just one lender's products. We've got a whole network of lenders, and so that's the competitive advantage it gives us to find interest rates that are up to 0.5% lower than banks and credit unions.
Okay, so I want to talk a little bit about the interest rate. So I walked in the door today, Rod, and I said, hey, I'm buying a $300,000 home and I'm putting down X amount of money, and based on my credit score, my credit rating, the interest rates today is 4.5%. But because you're a wholesaler, you might actually be able to shop around a bunch of different places, and instead of me paying 4.5% for this mortgage, I'm going to pay 4.25%.
Yeah, depending on your credit profile, our interest rates will be typically about 0.25% lower than most banks and credit unions. And depending on the credit profile and the particular loan program, we can get you up to 0.5% lower.
Wow, I'm liking that. So what happens if, even at 4.25%, let's say because you found a better rate for me at 4.25%, and because of the amount of the loan I'm taking out, it's going to cost me $1,245 every month to pay off my mortgage. But I said right from the start, I'm like, there is no way I can go 1 penny above $1,200 a month. Is there any way to lower that even further, that mortgage payment?
Yeah, great question. So one of the unique opportunities we have is we can get paid either directly by the lender, or if you want a lower interest rate, we can charge an origination fee, which allows us to deliver even lower rates to you, the consumer.
Okay, what does the origination fee mean? What is that?
So we obviously have to get paid to stay in business and make some money. Typically, most lenders do a lender paid type of scenario where the lender's actually paying the loan originator, And in our case, we have the ability to give you the option. We can say, hey, here's an interest rate that's a quarter, 3/8, maybe even 0.5% lower if you want to pay us directly. So your closing costs will be higher, but in the long run, it's going to give you that lower interest rate that'll bring that payment down and save you interest.
So basically, an origination fee would, I just want to break this down for people who may not understand, is your salary. Because I'm coming to you and you're doing all the legwork, you need to get paid. We're paying you for your time and your expertise and doing all that. But if I don't have cash up front to pay that, then whatever bank we go through will say, okay, fine, I'll pay you your salary, but it's going to be included in my loan and I'm going to wind up paying off your fee in my mortgage loan. Is that correct?
Yeah.
But if I had, let's say I personally had the money, I said, well, I can't afford $45 extra every single month for 15 or 30 years over the life of the loan, but I've got $1,500, which is your fee. I can just hand you $1,500 and that would help lower my mortgage payment.
Yeah. Perfect description. So yeah, it just gives the consumer the opportunity to choose. If they're going to be in the home a short amount of time, they probably want to reduce their cash to close and the upfront fees, because they won't have the loan long enough to recuperate that upfront cost. But if you're going to be in the home 5+ years, then it's probably the best option to have the lower interest rate, pay a little bit more up front.
Okay, that's interesting. So what other type of ways can we possibly get better interest rates for our loan or don't have to pay as much at closing?
Yeah, so there's a couple of ways. On conventional and FHA mortgages, as well as VA, they allow the seller to actually pay up to 3% of the sales price towards your closing costs and prepaid items. So negotiating with the seller to cover some of those upfront fees. Another way that we have of getting people a lower monthly payment is monthly mortgage insurance. Usually if you put down less than 20%, you're going to have monthly mortgage insurance. That insures the lender in case you default on the loan.
So that would be, I'm sorry, not to interrupt, but if my loan is $100,000, that's how much I'm going to take out, but I pay less than $20,000 down on the home, or the home was cost $100,000, and I pay less than $20,000 down toward that, then if it's less than that 20% you're talking about, that's when you would do mortgage insurance?
Yeah, and we have a couple of options. You can either pay the mortgage insurance, or if you've got good credit, you've got the option to choose a loan with a slightly higher interest rate, but no monthly mortgage insurance. Usually that option is going to give you the lowest monthly payment. So again, if someone's going to be in the home only a few years, the lowest monthly payment is going to be their best option, saves them the most amount of money. And our monthly mortgage insurance rates, our wholesale lenders go out and they've bargained with the insurance companies to get a lower monthly mortgage insurance. So if you compare our monthly mortgage insurance rates on a loan with that monthly MI, you'll find that sometimes our clients are getting $20 to as much as $80 a month lower in those monthly mortgage insurance premiums, just because they have that buying power with the mortgage insurance companies.
Well, it sounds like there's a lot of moving parts to trying to get a mortgage. It's not as simple as just walking in and saying, okay, I want a loan. Your interest rate is 4.5% and you walk out the door. There's a lot of parts involved.
Yeah.
Or could be involved if you are trying to lower your rate or your monthly payments or anything like that.
Yeah.
So you're the person I would want to come talk to and find out that's another reason maybe why sometimes wholesale mortgages might be a better option than retail, because you have access to a whole bunch of different mortgage lenders.
That's right, yeah. I mean, that's really our competitive advantage when you compare us to a retail lender like a bank or a credit union. It just gives us the freedom. We work for the client. Our only incentive is to find each client the lowest interest rate, the lowest combination of fees, and if they're in a situation where they're going to have monthly mortgage insurance, find the lender that's going to give them the cheapest monthly mortgage insurance. So in the end, that value is just passed on directly to the client.
Okay. Anything else we need to know about trying to get a mortgage? Because I do need one right now. So what else do I need to know?
Pretty simple. We love to just talk to people. That's the funnest part of our job, is educating the consumer and showing them the variety of options. So just calling us at 801-APPROVE or visiting LendRightMortgage.com. That gets the process started. It's pretty quick. We do a loan application. It can be completed right on our website, or we can also do it over the phone. And usually in about 15 to 20 minutes, we can have someone pre-qualified and give them what their max purchase price would be, what their options are if they're refinancing, and just give you a quick overview of the potential savings that we can offer as independent mortgage brokers here in Utah.
Great. All right. And that's your Rod Rex.
Rod Rex.
LendRight Mortgage. So you
Yeah.
can go to LendRightMortgage.com to get more information.
Yes.
All right. Well, thank you so much.
Thanks for being a Money Making Sense listener. Follow your common sense onto social media. Money Making Sense on Facebook, Twitter, and Instagram.
I'm Susan Bond, and this is my good friend Dave Hansen. Join us for MacCasts. We guarantee you a feel-good story and great free resources.
We're new, we're fun, and we're putting community back into commerce.